Kia ora and welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. My name is Helen Mattison, and today on the program I'm joined by Chief Financial Officer at Meridian Energy, Mike Roan. In the last 24 hours, Meridian, which is known as a gentailer or generator retailer, has announced a net profit of $191 million for the 6 months to December the 31st. That's down about 5% on the same time last year, but earnings are up about 4%. I'll be talking to Mike about the numbers and the outlook for Meridian. Before we get started, here's some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Welcome, Mike.
Thank you for having me.
Thanks for coming in so soon after the results are out. Let's perhaps not jump straight into the numbers for retail investors. Let's give some context to where Meridian sits. I said that you're a gentailer in the introduction. That means you're a generator retailer, but there's about 4 of you who have about 90%, I think, of the energy market in New Zealand. You've got Contact, which is privately owned, then you've got we've got Mercury, and then you've got Genesis, which, like you, has some government 51% owning.
Yep.
What would you say is the differences? Like, you've got hydro, you've got wind, you've got solar, but how would a retail investor think, gosh, Meridian, how's that different to the others?
Yeah, so we're the largest renewable generation business in New Zealand. That's kind of the roots of our business. Started with, as you mentioned, hydro generation. We own the Waitaki Chain and Manapori power station down the South Island, and between them they hold about 70% of New Zealand's hydro storage capacity. So we're a big player in the supply side of the sector. We produce it all from renewable assets. As you mentioned, we also have wind farms throughout the country. So, we've diversified our wind resource, and we have a relationship with just under 400,000 retail electricity consumers, or actually a combination of residential, small business, corporates and large industrial customers throughout New Zealand. So the thing that people know us for is, one, as you say, we're a gentailer, we're an integrated generation retail business, but I think when people think of Meridian, they think of us being a sustainable, renewable generation business.
Wouldn't Mercury say a similar thing, though?
Oh, they would. So there is no question about the direction of strategy within the energy sector, for obvious reason, because the globe and New Zealand are decarbonising economies, and the only way to do that is to electrify your economy. And if you're decarbonising, then you've got to build out renewable assets. So our competitors each have renewable generation development strategies as well. I think the reason that people would naturally remember Meridian in this space is we made that commitment back in 2004. So before I was in the business, and at the time, it wasn't either as obvious or as popular as it is now. And so I think in the collective memory of Kiwis generally, is there'll be some recognition of that stand a long time ago by people who are operating the business that still probably sees us set slightly apart from our competitors. But no question, we are all trying to build renewable generation assets to help decarbonise the economy and not only hit New Zealand's zero carbon goals by 2050, but ensure that, do our part to help the damage or impact of climate change.
So let's jump into the earnings. Net profit is down about 5%, but what's the reasons behind that?
Yeah, so it can get a bit complex, Helen. Is the way I describe our operations and our financial outcomes, certainly over the last 4 years, is they're pretty stable. So you might see small deviations in our accounting metrics, up or down year on year. and I can come back to net profit after tax because it's not my preferred measure of performance.
Yep. And
I mentioned that this morning, when talking to our investors, is I have two measures of performance that are my preferences. One's called EBITDAF, which is earnings before interest, tax, amortization, and financial costs.
It's a horrible term, but yes, we've got it out there. Good.
But that replicates the best way accounting measures can, what I'd call operating earnings. So they've been good and stable. In fact, they've risen slightly this half compared to last half of the year. The first half of last financial year. Yeah. So they've risen even as net profit after tax has fallen. And so you get this difference. But the other measure that I use is operating cash flows. Because operating cash flows have nothing to do with accounting. They're just what cash, did you receive? And again, operating cash flows have lifted on the first half of last financial year. But they are all around, what I'd call stable earnings platform through, from 2021 through 2024 is reasonable stability and slight, I'll call them incremental uplifts in both EBITDAF and operating cash flows over that period of time, driven primarily by the work that our retail team has done to grow the retail business and work with customers to have them attracted to Meridian. So
let's unpack why it's been successful. You'll be able to keep that that leverage, if you like. We have a cost of living crisis. We've heard a lot lately. We had Contact on the program last week talking about wholesale prices increasing, saying that people's power is going to be increasing, probably businesses as well. How have you managed to keep a lid on that? And is it that we will see a change because of all these increases of cost? I know in your numbers you do talk about inflation and the like obviously has had an effect. You've got debt, etc. So how have you been able to do it, and what's the outlook?
So some really good news. So I'll start with the really good news and we'll see where it goes from there. Is we talked about our competitors just before. We have a very competitive wholesale market environment in New Zealand, and it's one that competition is allowed to flourish. And when you look at residential retail prices, they've actually risen since 2012. They've risen at a rate that's below the level of inflation. So that level of competition in the wholesale market has allowed people to compete at a retail level and compete successfully with price increases that have been below the rate of inflation. I always say to people, so you out of your take-home earnings, your income, you're paying a smaller percentage today for electricity than you were paying in 2012. And that's anybody who hasn't gone out there and maybe put in a hot pool or spa pool, and increase their consumption. But your point, we've done a really good job on keeping the lid on retail price increases within New Zealand, and that's been recognised internationally. So New Zealand has been the beneficiary, I think, of the World Energy Council's captured us as one of the top 10 performing electricity sectors in the globe over the last, I think it's 3 years. And that's a massive feat for New Zealand, and something that we're proud of, and we should take stead of as people who consume electricity in New Zealand, because out of that top 10, most of those countries are in the European region. And so for a small country that doesn't have an interconnected grid across a massive continent, we really do a good job. If I look to the future...
Because I got a notice this morning saying my power's going up, for example, not from you. And Contact are definitely...
Maybe we could change that on the call.
All right, I will look at Meridian. But is that about to change?
So, the future's always uncertain. But as we look at the future, electrifying the economy, is the thing that we see that changes is not so much the energy component of your price. Is the energy component of your price, my expectations will still keep that below, the rate of inflation, so increase in that price. But we have to build out the distribution and transmission networks in New Zealand to support the electrification of the economy. Right now, a big portion of our economy runs on fossil fuels. And to remove that portion of the economy or move them off fossil fuels is we need to electrify them. To electrify them, we need to connect them to both the transmission network and the distribution network. And they build those networks at scale, and the costs for that build, while they're building scale for 10 years' time, we need to pay for them today. The Commerce Commission determines what's a reasonable return, and then what's a reasonable level of investment for people to make. So our expectation is that the distribution and the transmission component of your residential bill could go up by rates that exceed inflation. And that is to try and stay ahead of the investment that needs to be made. So, as I say, future's uncertain, but we could be in for a period of electricity price rises that lift above that rate of inflation in the coming years.
Kind of cold comfort for consumers, isn't it? Because you've extrapolated it out, the energy versus the transmission, but at the end of the day, the poor old punter, their bill is going up, and it could be above inflation. I mean, we talked last week on the program about 7-8%. That's quite sobering.
It's tough. There's no question. You look at it and go, my mum and dad, people that are in your community, yourself, paying electricity prices, and no one likes to pay for products or services, more than they were last year. But the reality is to build out the economy so that it can decarbonise, is we need to make these investments, and those investments need to flow back and be paid for. So it's one of those steps in the transition that we're all going to be part of, and as you say, it might be a bit uncomfortable for a few years.
Given that uncomfortable situation and a bit of pain for gain, supposedly, competition will heat up. What's Meridian doing there? I know we talked with Contact last week, and they talked about broadband customers, having customers that basically look at more than one or two products with you, sort of thing. I know you've got EV and solar as other things that you can have, as well as your electricity. Are you looking at that kind of model as well, or is it other avenues like rural and industrial that you're more focused on?
So we're a big supporter of the rural economy in New Zealand. We've got a big agricultural business. We support the rural communities massively as part of what we currently do. I should have, you asked me initially what are one of our points of differences, and one of the points of differences as it relates to retailing for us is we only sell electricity. So we don't sell broadband, we don't sell gas, we don't sell cell phone services. So we don't sell any of those products. We focus on the sale of electricity, and we call ourselves a pure play as opposed to a bundled product provider. Our competitors all provide bundled products, and ultimately the strategic difference in the approach that we're taking, we feel that we can provide a better level of service and product focus for people who consume electricity by just focusing on the one product. We see it in the number of customers that do switch to us. So we've got our retail business has grown materially over the past 5 years, probably grown by about a third over the last 5 years, and the level of retention of customers. So you welcome someone in the door, they like what they see, or they don't. Is we retain the highest level of customer satisfaction in New Zealand. So our levels of retention of customers who do join us are the highest in the market. So we think that pure play approach is it gives our customers the most that we can give. And we feel that if we, split into other products and services, that it would separate the focus that we would otherwise have on, providing a good retail electric service.
Mike, what about the challenges that are ahead and that have been perhaps even in the last half year? I mean, I think generation transmission, there was some capacity restraints that you had at Manapuri, and I think one of the big West Wind farms and the like. Drought could be something that is we're headed for.
Yep.
El Nino, I think, is not so bad, but you never quite know. Obviously, we can talk about Tiwai and the smelter and getting some more, electricity for the grid coming back. But what would you say are the challenges, and how have you overcome those capacity issues?
Yeah. Great questions. There are any number of challenges that we do face, whether they be generation assets that we own, the transformers that we rely on, the transmission network that we rely on, that play out whether it rains or not.
Yeah.
Is
the lakes.
Yeah, it all plays a role. But I mentioned the word portfolio before, and what we do is we try to quantify all of those risks as best we can. So we've got a massive stochastic model that we use to present the portfolio and understand the risks that we're taking. All those risks, whether it be dry year risk, whether it be peak related risks, whether it be transformers, asset diversity, relationships with consumers, residential, commercial, C&I. It takes all that information and it tries to provide the best guidance on how to use the energy that we have stored at any particular time. So we've got this massive quantitative process that sits behind our business, looks to manage those risks, and gives us the best advice possible as to what to do, recognising that it's not all beer and skittles, and sometimes things don't work out in your favour. So, but we've got an amazing track record. We've, as a business, we've come through very serious droughts, and droughts that would have caught the national headlines 10, 15 years ago.
But climate change, everything is
climate
slightly
change
different.
is coming at us, and so we think about climate change carefully as well. We've got assets that you're not going to be able to move. The hydro lakes that I kind of gave a summary of where they're located right at the start is you can't move them. And so we do a lot of modelling on what the future might hold, not just how your asset's going to perform today, that big modelling exercise that I talked about, but we use other models to look at what the future might bring out through 2050. And there's some really good news for New Zealand and investors, in Meridian, but I think New Zealand first and, then investors in us, is when those assets were built, no one built them on the basis, that climate was going to change. But
you've got some old assets, you've got to say too, some of those South Island hydro
they're
schemes.
old, but they get replaced. So they do get replaced over time. So, even though the age of the assets, they might have been built in the 60s and 70s, they get replaced over time. So the technology that sits in them isn't the original technology from the 60s. But the more important piece is as the climate warms, the amount of energy that we're able to capture during winter and use, because there'll be less snow, there'll be more rainfall over winter. So we will be able to use that energy in winter in ways that we can't use today, because when those weather systems arrive in winter currently, they get caught as snow on the hills, and it's not till September, October when it melts and we then get the water. So from a New Zealand perspective and from a Meridian perspective, we'll receive more water on average as the climate warms, and we will receive it at times that are far better to use that water over the winter period. So that modelling, you did mention it. Well, I should mention as well, it is a model, so there is uncertainty out there.
Yeah,
but
there is. Yeah,
the modelling all says really good things for New Zealand now, because those weather systems are bigger. Is the assets that were built to withstand, floods at a certain level are going to have to withstand larger flood events as well. But we run an asset management plan that spans the next 30 years. That information's all captured in that asset management plan. And so, the practices that we entertain and the dam strengthening's already going on. Mm-hmm. So, we should be able to capture that water and use it as it arrives. So
thinking shorter term, like this winter,
yep.
Let's jump into Tiwai, the aluminium smelter near Bluff. It's owned by Rio Tinto, majority owned anyway, and you guys, are big suppliers, to that plant. I think it's, it uses more electricity than anything else in New Zealand.
About
actually.
13% of New Zealand's
amazing.
Electricity supply goes to the aluminium smelter.
So you've just this week, I see that you've announced that you've got an agreement with them that you'll be able to bring back 20 megawatts?
20 megawatts, that's right.
Back into the national grid, that if we get short, the lakes aren't great, things aren't quite as you've been describing this winter, we can have some surety or certainty of supply.
Yeah, we've actually written 2 arrangements with Rio Tinto this year. We've got one which is a 50 megawatt deal, so a bit larger.
And that was this year, was that right? Okay.
Yeah, so that one allows us to remove 50 megawatts of energy that the smelter would have otherwise consumed over a longer period of time.
Right.
So that helps deal with the fact it may not rain at any point in time, because we have periods where it may not rain for 6, 8, 10 weeks. Yeah. And you need enough storage in your hydro facilities to wait till the next weather system arrives. If you remove that energy from the system, then you don't have to generate that much energy. Therefore, you can hold more energy in storage. And so that 50 megawatt transaction, that allows us, in effect, to deal with seasonal storage challenges. The 20 megawatt deal, which was just announced yesterday, was to deal with the first issue that you mentioned, which is winter peak capacity. Yeah. So, this winter there are concerns about the ability to meet peak capacity, and there's no question that peak capacity in New Zealand over winter is growing, and it's growing faster than underlying consumption. Mm-hmm. And there are some developments that were planned to come online before the beginning of winter this year that won't come on this winter, and therefore to make up the shortfall, those developments won't support or bring onto the system, as ourselves and our competitors are all looking for mechanisms that can give people the confidence that they need to keep consuming electricity and that will deal with those peak issues. That 20 megawatt deal allows us to cut energy supply at the smelter for up to 2 hours over, say, an evening peak when everybody's making dinner and sitting at home and got the gas cranked.
It's cold outside, right?
Trying to heat the home or whatever it might be, and that's quite a different product because it's a very short time frame dealing with that peak risk, as opposed to the 50 megawatt deals. Now that concept, successfully entered into those true transactions with New Zealand aluminium smelters, is that retail team that I talked about before has been working with South Island customers, smaller customers, with the exact same sort of products, and they've secured the same form of what we're calling more generally demand response. So it's a response to curb energy use from consumers. We call it demand response.
Oh, really? So it's not just an industrial
big
boy kind of...
No. In fact, to decarbonise the economy, is we're going to need to get demand response not just from the likes of Rio Tinto, and then I'll call reasonably sized businesses in New Zealand, but we're going to need to get it from residential customers who might have an electric vehicle, or they might have added a battery to their home, and small businesses. So this demand response product that we were just talking about at a big level, 50 megawatts is it's a big reduction in consumption, is we will look to secure those products from customers, whether they're small or large, over time. And it's just a matter of education and people being comfortable that what they're doing is the right thing for them and for us. And just like we're paying Rio Tinto for the right to curb their electricity use, is we would pay residential and smaller businesses in exactly the same way. So the relationship between us and consumers is, we were talking about the cost of energy increasing over the near term, is the relationship between us and consumers and customers is going to change.
Yeah. Reminds me a little bit of solar too, what you do with that. It's similar kind of thing. We won't jump into that though, Mike, because we are probably getting a little off piste. I need to bring you back to Tiwai.
Yeah, of course.
Because the elephant in the room always with Tiwai is, well, with the aluminium smelter, is that is Rio Tinto going to stay? The contract you and others have with them is just until the end of this year. If that was lost, you've said before, we would have to go with it. It's a big loss to us. We're mitigating. We're looking at other options.
Yep.
The others are saying they'd quite like it to keep going. What's your position on whether you want it to keep going, but whether you think that's actually the reality? You're still in negotiations.
Yep. So I think everyone who's analysed the smelter down south says the same thing, which is the smelter staying in New Zealand should be an economic proposition. It certainly is a good thing from the global perspective in that it's a green aluminium smelter, and if it was to shut down, you would see another smelter that uses coal as a fuel fire up. And so from a global perspective, it makes sense. And the real question is, can we and others reach an accommodation with the smelter owners that would see its operation beyond 2024? The underlying premise is the economics work, it's good for the planet, and actually it's good for the country. But
so what's the issue then for retail investors who perhaps don't understand the saga?
It's a super complex negotiation because Rio Tinto is negotiating with us and others to try and bring a package of contracts together that would meet their economic needs so that they can run a profitable business. And that takes time. In the past, Meridian has led that conversation. So right now, we provide 572 megawatts of contractual or contractual energy to the smelter. We have a contract with Contact Energy that provides us with 100 megawatts of energy that we effectively on-sell to Rio Tinto. When we wrote that contract and those series of contracts, the Commerce Commission came out and said they weren't comfortable that arrangement was one that should be entered into in future. We listened and said, we will not be the party that provides some form of syndication to Rio Tinto in future. Therefore, Rio has got to do that heavy lifting themselves. So they are now entering into negotiations with us and presumably others to secure the energy supply that they need. And I feel like a broken record, to be honest with you, is this has been going on since 2021. When we entered into the short-term arrangement with them, the 4-year arrangement, which, as you said, ends end of this year. But it is complex, and it's a new role for Rio Tinto to take, and they are intent on finding whether they can put that package of contracts together or not. We've said it to everybody anytime anyone's asked the question is we don't know. So we literally don't know whether Rio Tinto will keep that smelter open beyond 2024 or not. We've said more recently that we've been in pretty constructive conversations with them. In fact, we said that this morning, and the levels of innovation that they're bringing to the table are kind of engagement that we haven't seen before. So we know that they're working really hard to secure that package. It's just all we can see is what we bring, and And we've been really clear with what it is that we require from the smelter, which is, first and foremost, is they've got to become a good steward of the resources that they use down in Southland. So from an environmental perspective, they've got to act like a long-term citizen of New Zealand.
I haven't got a great track record, Mike, of that. Let's get real.
Yep. So we've been clear with them, and you know, fairness to them, they have changed their approach, and they're really
running.
Yeah. You know, I hate using the term leaning in, but they really are working hard on that, and we do see evidence of it. But they must, you know, the intent is definitely changed, but they must change that practice. We've said we need a contract that's durable and has tenure. So, and you know, when people have asked us, what does that mean? We've said to people, you know, we think contract over 20 years.
20 years, okay.
The right length for them to have confidence in deploying capital into their business, and you know, us to have the same level of confidence to continue to build out renewable generation assets.
So a fairly substantial deal, really, at the end of the day. So
massive. You know, massive for our business. You've got to treat it carefully. They're definitely listening.
Yep.
I can say that to you know, they are working really hard, but will they secure a package that's from their perspective? Yeah, we just don't know.
In the event they don't, because you have talked about the fact that if it doesn't continue, you have mitigation in place. I mean, one of the things obviously that you guys have been building out big time is wind.
Yep.
And I want to look at two aspects of wind. I want to look at offshore with some of the European partners on the Taranaki coast and the like, but they're not onshore too. I mean, your stake in New Zealand Wind Farms, which is another NZX listed company. Let's start with offshore. Is that with Park Wind is the European partner. So tell us a little bit about where that's at.
So offshore wind is an asset, you know, from an economic perspective, we see as it's probably a mid-2030s as a development set of options that we think will become economic. And the reason that building offshore wind turbines is a bit more costly than onshore is just the conditions.
Yeah,
you know, you're operating in pretty caustic conditions, and therefore the amount of money that you need to put in to protect against those conditions, and therefore the cost of that technology is a little higher.
Would we be looking beyond Taranaki, potentially?
It gets tougher, you know, so you could head down South Island, but offshore wind to make the economics work again, you need a reasonably shallow coastline.
Right, and so that is perfect.
The beauty of Taranaki is that the shelf runs out at a really shallow level for about 50 k's. And so if you're building offshore wind, one, it has a good wind resource, and two, it's, you know, the costs of actually tethering it and securing those wind turbines is, you know, is reasonably low compared to deep sea wind farms. So Taranaki is probably the premier location in New Zealand. You hear people talking about 2 to 3 gigawatt hours or gigawatts. I was talking megawatts. So a gigawatt is 1,000 megawatts.
Yeah, I was going to say,
I was talking about Rio Tinto, I was talking 50
Tiny
megawatts.
In comparison,
We're talking 2,000 megawatts or 2 gigawatts of
so
energy
huge potential.
Offshore. So huge potential. But
costly in the interim.
Got to get the economics right. Come all the way back to that first conversation we had around, you know, residential pricing is you've got to prosecute these resources in the most economic way possible while securing the options so that they're available should things change. And so that's offshore wind. Offshore wind we see as an option in New Zealand, but right now it's not economic. And that compares to onshore wind.
Yeah, onshore.
Which is, it's economic in many places. And that's evidenced by the number of wind farms that have been built and people developing wind farms today. You've probably heard this before, but you know, there's a saying which is New Zealand's the Saudi Arabia of wind. And it truly is. Like, the reason these things stick is, you know, anyone walking outside in Wellington today would realise it. But we have an incredible wind resource that most of the world would love to own. And put it in maybe helpful context is most of the globe managed to, if you construct a wind turbine, let's say it's a megawatt in size, the capacity factor for that wind turbine is about 30% of the time. So you might have it operate 30% of the hours that you construct it. In New Zealand, that capacity factor is more like 40 to 50%.
Just wondering, Mike, though, can you give us a perspective on where does wind sit in taking perhaps over from hydro? As you say, it's a burgeoning, developing type of energy. We have great conditions here, but it's also costly to set up all of that development too, isn't it? So where does it sit now, and where do you see it becoming part of the earnings percentage or pie, if you like?
Yeah, again, wind's what is known, alongside solar, is known as intermittent resource. Like, you only generate electricity when the wind blows.
Yeah, well, that's
so
right.
We call it intermittent wind resource.
Yeah.
But New Zealand's got a phenomenal resource. We also have hydro storage. And as I mentioned at the start, Meridian owns 70% of New Zealand's hydro storage, but we do get dry years and dry periods. And so what we do with wind is we build a wind farm is synthetically, which is never a great word to use, but you take the energy produced by that wind farm and you drop it into your hydro storage, because when the wind blows, you don't actually need to use your hydro energy as much as you would have had to use it if the wind farm didn't exist. So when the wind blows, we back off our hydro power stations. And because hydro power stations are incredibly flexible, they can go from 0 to full load over a couple of minutes, you can manage the intermittency of wind very effectively. So our portfolio is built for the integration of wind farms and solar as well. That intermittency doesn't cause us any challenge. So as we build out the wind resource, what you'll see is our hydro resource will start to operate a little more flexibly. So right now we do run it base load.
Yeah.
But what you'll do is you'll start to see it operate a little more flexibly. So wind will become more of a base load component in the energy system, and hydro will flex a little more effectively, which will reduce the exposure to dry years.
So when will that baseline change, do you think?
Well, it already is.
Right.
So it already is. Every time we add a new wind farm to our portfolio, you reduce the exposure you have to dry years. So you already see wind displacing hydro generation within our portfolio. And so the more wind farms that we have, the more that will happen. We've got 170 megawatt development right now that'll be completed at worst end of September this year in the Hawke's Bay, Harapaki wind farm.
Harapaki, yeah, that's right, yeah.
That'll add about 500 gigawatt hours of energy back into those hydro lakes. And so as that gets built, the hydro lakes will operate more flexibly. We'll be able to grow our retail portfolio off the back of the combination of the two asset classes and the fact we've got a bit more energy overall. You mentioned New Zealand wind farms?
Yes, because you've got a 13% stake in them. You've got the 50-50 joint venture. Is that the Harapaki? Or?
So Harapaki's in Napier.
Napier, yeah.
And Te Rere
North
is, again, it's actually, so as a technology, it's, reasonably, it's old.
Yeah.
And so what's happening at Te Rere is a really good example of a repowering where a wind farm that might produce just over 100 gigawatt hours in any year, based on what we can see the potential to put in new turbines, is likely to produce upwards of 700, maybe 750 gigawatt hours. So sevenfold increase in the amount of energy that you can get from one site through repowering. And
so upping the tech as opposed to finding more sites, because that's the other thing, often finding the right spot for a wind farm is challenging.
Yes
and no.
Yes, I was going to say yes and no. In New Zealand, again, we're really lucky because we've got a lot of wind. Getting the economics to work, there's turbines that you've got to buy, and then you've got cable that runs between each turbine, and then you've got to put in roading. And so get a good wind resource. They typically been on reasonably hilly terrain, and therefore the roading cost is reasonably expensive. And so finding a site that's not on a mountain range but has a good wind resource, that does get a little trickier, and you need a little more skill to make the economics work in flatter terrain. But it is being done.
Now, what about solar? I know others have talked recently that it's niche in New Zealand. What's your view on that? Because it is something that you are investing in.
Yeah. We're, so long as it's renewable, we are technology agnostic, and we'll only invest in it to the extent it makes an economic return for those who have invested in us. And so whether it's solar, wind, or hydro augmentation, we look at it all. The characteristics of solar are different to the characteristics of wind and hydro. Sun doesn't shine overnight, so you're not going to get any energy production from solar energy. So there's a cost challenge or an economic challenge that it faces that other technologies don't. But the cost curve for solar arrays has come down massively over time.
But are we really in the right part of the world? Do we get enough sun?
So we do in some locations. So up north, we do.
Northland,
so
right, yeah.
Northland. Up in North Island, not too bad. Interestingly, I mentioned the Waitaki Basin, the Mackenzie Basin. That's got really good sunshine or radiance, solar radiance as well. And there are other parts of the country that, not too bad from a solar perspective. Solar will get built out in New Zealand. So, when we look at our pipeline of development options, is solar technology is a big part of that pipeline alongside wind. So we have to be, it's a new technology to deploy in New Zealand. So I talked about how we integrate wind farms into our hydro assets, and because we've been doing it for a long time now, it's second nature to us.
This is a bit different.
Adding a solar farm that only operates during the day, it will cause some some challenges that we
quite a diversified portfolio there though, Mike.
That's it. So there you go. We diversify our portfolio a little more. We take eliminate a little more risk from our operations, and help stabilise our dividend profile.
One thing, Mike, EVs, that's something that you guys do offer in terms of charging. We obviously had the clean car rebate. That's no longer. There are lots of people who say that's a real shame. We had momentum, and perhaps that's dropping off now. What have you guys seen, and what do you think is going to happen there?
So I think most commentators expect that the number of EVs that were being purchased will fall in the short term, but our view long run is, while it might have a short term impact, long run, the technology that's used to build an EV, the cost of batteries, will bring those costs down, just like we've seen with wind farm, wind turbines and solar arrays. As the costs will come down, there'll be economic parity with combustion engines, and people will be driving EVs. Come back to the goal, we need to electrify transport and industry if we're decarbonising the New Zealand economy and the global economy. And there's a lot of money being put in internationally to do just that. So while there'll, likely be a short-term impact, is long-run the trajectory for EV adoption in New Zealand and globally is really strong.
So where does Meridian see itself in terms of offering that service? And I mean, there's many, many others sort of in that industry too.
Yep. So we offer, we don't sell EVs, but what we do is we offer products for people who own EVs.
Yeah.
So, you might get a lower electricity rate if you agree to charge your EV during off-peak periods, so that we don't have those winter peak challenges that we were talking about earlier.
Again, it's that.
So, we offer a product to consumers who might own an EV to charge their cars overnight. We might offer them a different rate again for allowing us to draw energy from the battery to satisfy electricity consumption. So that's an emerging product, emerging offshore, not so evident in New Zealand, but it's coming. So, we as a business see the relationship with consumers changing, given people are going to increasingly be driving cars that have batteries which can produce energy for their own needs and for the needs of others. So that relationship will change over time, and we'll offer products to people so that we can use those technologies so long as people are comfortable offering them back to their energy company. So
there's a couple I want to jump into, and that was batteries. Obviously, you're talking about EVs, and you have got a battery, Ruakaka. You've got a project there, and also I'm also keen to find out about green energy. Green hydrogen. That's another fledgling, if you like.
Yeah. So batteries, as you mentioned, we're investing in a 100 megawatt battery just out of Whangarei at Ruakaka. It'll be our first utility scale battery. Again, these investments, they're significant investments. So that, I mentioned Harapaki before. It's a $450 million investment. The battery up at Ruakaka is a $180 million investment. Integrating a battery into our portfolio is actually going to be a whole lot easier than a solar array.
Really?
Simply because you switch it on and you switch it off. You store the energy. You control how
rather
you use it.
Sun.
So you literally control it. What's new for us is the construction of that battery. So, actually building an asset that we haven't built before, and seeing what you need to do to put the batteries on concrete plinths is first for us. And at that scale, it'll be the largest battery that New Zealand will
I was going to say,
have.
is it one of the biggest?
It is. So there's an existing 35 megawatt battery in the Hamilton region. But there'll be 100 megawatt battery and bigger again. And we'll see further batteries deployed in New Zealand because we need to meet the peak energy needs. Batteries will help us do that, and thermal energy, which historically provided some of that peak energy, help meet some of the peak energy, they'll be phased out of the system. So batteries will become more useful as a technology as part of portfolio. So you see us moving into these new territories. Wind, not new for us, but 2004. Solar, we don't have our first solar array, and batteries. But they're all coming, and they're all coming because they're economic. They create an economic return. From a competitive perspective, you see everybody doing the same thing because everyone's wanting to compete in the wholesale market to increase their market share and improve returns for shareholders while keeping the cost of energy down. And so it is the future.
Long-term projects, though, you've talked about 30 years and some of your commentary that was out today. For investors that probably don't have that long, what would you say?
It's hard to talk to individual investors. I think the best thing that we can do is run the business that we're in as effectively as we can for them, regardless of how long they want to invest in us. So as someone who works in the business, I look and say investors make their choice about one, whether to invest in us, and then two, how long to stay. Our job is to recognise that we've got an asset that require a 30-year life to get a return over. My job is to make sure that the capital we deploy in it is done efficiently, that the operation of the business to make sure that it operates over that 30 years is as efficient as it can be, and then shareholders can make their choice to come and go. Out of all of that, we look to produce reasonably stable earnings stream.
And dividends, obviously.
And reasonable, stable dividends. And so, this morning on our investor call, I mentioned a small lift, 2.5% lift in our interim dividend, which is similar to the lifts you've seen in our dividend over the last 3 to 4 years. And once Rio Tinto makes its decision over New Zealand aluminium smelters, we'll then look at our dividend profile and make future decisions on what that would look like. So,
So, Mike, green hydrogen, there's been lots talked about. It sounds quite a complex energy to develop. Where are you at?
Massively complex and new energy. So we've talked about how some of the technologies we're deploying are new. Hydrogen as a technology at scale is very, very new from a global perspective. as well. It's combustible fuel as well, so you've got to be very careful around the way you do extract it and then store it. We've got 2 partners that we're working with. So first and foremost, Woodside, who are helping us from a technology perspective. We talked about the complexity of it. It's new. They bring a wealth of expertise dealing with combustible, challenging technical fuel. So Woodside as a partner, super credible from a technology perspective. And Mitsui, they understand the Asian marketplace for hydrogen far better than we ever would. So across the 3 partners, you've got us understand the renewable energy base in New Zealand, Woodside, who understand the technological challenges that we will invariably face, and Mitsui, who should be able to market the product into markets that Meridian doesn't have any presence in. It's a great combination.
But some way off by the sounds of things.
Yeah, it is taking longer.
It
is taking us longer, and it really is the complexity of the partnership.
Yeah, as well as
trying to make sure that as we develop it, we do it safely, and we've got confidence that it'll be an economic solution. So it's a natural place to build hydrogen because we have such a bountiful renewable resource in New Zealand to power it with. But like every new technology, there are inevitable challenges, but we'll see.
Thanks, Mike. Lots of things to unpack there. We could have gone on for hours, but we have to wrap it up here. Thanks to everyone for joining us today. You can listen to Shared Lunch on YouTube or on podcasts, Apple and Spotify. Leave us a rating and what you'd like to hear next. Enjoy your week.